Section 6. Costs of doing business in China. Upon completing this section, you should be able to understand some economic and political factors that affect the costs of doing business in China. You will also learn potential ways to reduce related costs. China is controlled by the Communist Party and followed the planned economy system for more than 40 years. Under this system, all economic activities were strongly regulated by the central government. Politics had a major impact on the economy and thus influenced the cost of doing business in China. Though China has primarily entered into a market economy and tried to make fundamental changes to its economic system so that it looks more like capitalism, there are still many differences in terms of the labor force, tax systems, financing system, and the like. In this section, you will learn about Chinese labor force, Chinese accounting and tax system, and Chinese banking. In terms of labor force market, China is far from being a modern industrial country. More than 34% of its total labor force works in the agriculture sector, which is characterized by a self-sufficient economy. On the other hand, more and more peasants flood the cities searching for industrial employment and creating huge unemployment problems in the urban areas. In addition, the government risks running out of resources for the social welfare fund in the face of growing unemployment and retirement. Traditionally, labor unions were weak and subject to the influence of management in China's labor market. This is still true, but varies among different types of ownerships. Almost all state-owned and incorporated companies have labor unions, but they are controlled by the management. Most private companies, large or small, do not have labor unions. Foreign-funded enterprises usually develop labor unions according to local laws or regulations, but usually they are more like a management tool than a rival. Workforce pay and benefits vary across different ownerships. Historically, Chinese companies used to provide lifetime employment and social benefits for their employees, but the wages were low. On the other hand, private companies and foreign companies provide high wages but low benefits. After 20 years of reform, these two different pay systems are becoming more like one another to attract more competent personnel. China has also enacted laws to protect the workforce pay and benefits, but at a gradual pace. As of June 2013, minimum wage in some areas of China was as low as 1,010 won, or approximately $165 per month. However, many workers in non-state-owned companies are not protected. In addition to salary, Chinese labor laws require more and more companies to join the social welfare system, where companies also pay for four funds: a housing stipend, unemployment insurance, medical insurance, and pensions, all calculated at a fixed rate determined by the employee's base salary. Unions in China tend to have harmonious relationships with management, while in the United States the relationship is more adversarial. Traditionally, Chinese unions were controlled by management. In addition, the Chinese government lacked strict laws and regulations as well as strong enforcement to protect the workers. Furthermore, Chinese workers may not have the adequate awareness of their rights to protect themselves. In this sense, China has a long way to go before it can build modern social welfare systems. Prior to the 1980s, the Chinese accounting system served the purposes of government control in the planned economy rather than the purposes of reflecting the true financial position of the company. Currently, Chinese authorities have adopted the International Accounting System, or the IAS, which in many ways differs from the U.S. GAAP, or the General Accepted Accounting Principles. As the Chinese business environment is still evolving, there are no standard business practices. Chinese accounting standards are sometimes vague, creating difficulties for doing business in China. Again, firms have to depend on their relationships with related government agencies to resolve tax problems. China's tax policies for domestic, foreign-funded, and mixed enterprises are currently different. The tax rate for both domestic and international firms is 25%. However, small companies may only pay 20% tax in some cases, and qualified new high-tech companies pay 15%. China's accession to the WTO has forced it to reform this policy to be more compatible with international practices. Therefore, China is considering adopting one equal tax system for both domestic and foreign-funded enterprises. Under this policy, multinational companies may have to pay higher taxes, thus increasing the cost of doing business. Another reform in the tax system is the potential merger of the state and local tax systems. Currently, firms have to report revenues to two tax bureaus, the state level and the local level. One problem with this dual tax system is that sometimes firms do not know to which one to report. With the merger of the two subsystems, firms could reduce their costs of doing business in China. Although Chinese banks hold huge amounts of personal savings, they usually support only the state-owned enterprises. Furthermore, prior to the WTO accession, China had very tight restrictions on foreign banks providing financial services in China. Although the financial service market is more open since 2002, the role of foreign banks is still limited. Multinational companies doing business in China have to seek funds from the international market. In addition, China has a very strict foreign exchange policy. Under this policy, the Chinese currency, the yuan, is not freely convertible, and all foreign exchanges are centrally regulated by a government agency. Compared to the United States, Chinese financial services lack the infrastructure to move in a healthy direction. Since the business and personal credit system is still underdeveloped and not much financial information is available in the market, the risk of doing business in China is higher than in the United States, and so are the costs. By now, you should have a basic understanding of the function of Chinese labor unions and the Chinese banking system. In addition, you may also understand some of the major costs involved in doing business in China.